Friday, March 31st, the last day of March, and we've got the stock market indexes up again. This is like 4 out of the last 5 days. But most importantly, we're starting to get overbought. That implies that the stock market indexes are approaching or at a rally high. Sometimes these rally highs are extremely significant. The last huge oversold condition we got was October 13th, the bottom of the bear market for 2022 and the beginning of the bull market that we are in now. And I think will last throughout the year and probably somewhat into next year, maybe even more than that. I'm not used to long-term forecasts. I like short-term forecasts. That's my expertise. Now, you can contact me at info@ersignals.com, request a symbol that you want me to analyze, ask questions, you name it, it will be me that I will respond to that email. So, starting with the stock market indexes, the S&P 500, the Spider SPY, almost every day is where I start. And by the way, we've got a few new commodity signals today and some very good signals that have been progressing great. We'll get to that in a few minutes. S&P 500 is right up there now, about to close, starting to close at the very beginning of the time frame to close the old gap at 407 to 408. In the upper left-hand corner, we have the little colored zone where the gap is, and we are just now, this second, punching into that black hole in space that tends to suck the price action back into it. That's what I call a gap. That's my little analogy. And we are rushing up fairly quickly. 407.50 at the moment, up a modest 382. So it's not like it's a heck of a lot higher on the day. This is a decent, modest net gain for the day. And it's relatively early for my recordings, 9:22 California time. So there's plenty of time. We're not even halfway through the day for the market to do a variety of things. Now, what I think is going to happen here is that we're going to go up to 408, close the gap, get overbought on a very short-term basis, and then turn back down some. Not necessarily a lot, maybe only a few points, not even necessarily closing lower on the day. But we might end up with a short-term rally high. And when I mean short-term, I mean short-term. For scalpers or swing traders, this could be a great idea. Short-term, I think, may mean for the balance of a day, day and a half. And it's Friday, so I'm talking about into Monday, maybe Tuesday. So watching very carefully what starts to happen around 408. We haven't gotten there yet, pulling back down momentarily. That's a 5-minute chart on the left-hand side. On the daily chart, look at the gains we have made here since the low at 389.15. Let's call it 390. And that was only on the 24th of March. A very nice up day. Another up day the next day, a very small down day the next day, which was the 28th of March. Then up we go Wednesday, Thursday, and so far today. That's 4 up days out of the last 5 this week. Pretty good. And again, we're moving up from a low of 390 all the way up to 408. 18 points this week at the moment. Getting close to overbought, but not quite. We're at 72.08 on my custom relative strength index. Anything above 75 is overbought. The last time we go to overbought was when the market turned down, and that was February 2nd, February 3rd. So pay attention to these overbought, oversold yellow daily price bars. We're not yellow yet, but guess what? The QQQ turned yellow this morning. We'll see that in a minute. Let's go to the DIA. That happens to be the Qs. I'm going to change to the DIA. And we have a gap up market. We've got a bunch of gaps in a variety of indexes lately, but today's the first gap on the DIA. Now remember, there are really essentially three types of gaps. There is the breakaway gap, which is the beginning of a bull or bear move, and it's breaking away from some sort of a top or bottom. There is the exhaustion gap, which this could be in the DIA, too soon to tell, but that's the end of a bull or bear swing. So be wary of that. And the third gap is kind of a catch-all. It's called a common gap. It happens in the middle of an uptrend or downtrend. But the important thing to remember is the gaps are almost always closed, And that's like a black hole in space that tends to suck the price action back and close the gap. It just happened yesterday. We gapped up on the morning. We came back down, closed the gap on the DIA, and then went right back up again and almost made new highs. Classic example. So will it happen today? Hey, the day's not over. Kind of doubt it, considering the way it's acting. But we're also in a major area of resistance. It's very wide. It's not very well defined and not a lot of accurate spots per se in that range. But I don't like the fact that we're getting up to 69.99, almost 70 on the RSI at the moment. And that's the weakest of the three Qs, DIA, and Spider that I follow along with the 2000. So gap below the market, something to not forget about. Let's go and look at the QQQs. Now remember, a little over 100 share stocks in the Qs, and so it's obviously bigger than the Dow 30, but nowhere near the size of the S&P 500 issues in the S&P. So this is affected by interest rates more sensitively, the Qs, not quite as high financed on the average, capitalized stocks, and weighted toward technology instead of the industrials, Dow Jones. We are overbought. Watch out. This market is about to top out. We are overbought on the QQQs. And if that tops out, the rest of them will swing down also. Okay, where is it going to top out? Precisely. I think there's a darn good chance it's going to be right around 322. There is this very old gap going way back to August 19th of 22. And that is old, but not to be forgotten. So when we get, if we get up to 322 on the QQQs, watch extremely carefully. It could stop rallying and turn back down. So we're closing an old gap and we're overbought. Plus, we have a smaller gap a few days ago, earlier this week, to consider coming back down and closing. This looks a little bit like a pseudo type of gap. It's not the kind of thing that I would feel real strong about closing. It's one of those slightly iffy situations. So stock market indexes are doing exactly what I wanted, precisely what I talked about several days ago, and I'm really happy about that. So now the tables are beginning to turn the other way, and I'm starting to talk about the end of this particular leg up. It's not the end of the bull move. It's the beginning of a minor downside correction. It will probably last a few days to maybe a week or even a hair more in the early part of April. And then later on in the month, I think we're going to see new highs again. I'm bullish, intermediate to long term, no ifs, ands, or buts about that. I am looking for major new highs in the months to come, the bull market progressing during the year. And this is back to my S&P 500 chart. We're almost at that little red line right there. 408 does the job, and our rally high so far right now is 407. 50. We're right there right now, tiny bit above the high that we made on the previous attempt to close the gap, which was on March 6th, and that rally high was 407.45. Here we go, 407.60. All I need is to touch an exactly 408.14. 408.14 is just super close. It could happen any minute. Literally, it would take less than a minute sometimes to go up a half a point. So this is kind of exciting here. We're close to rally highs. We're close to overbought conditions. That QQQs are already there this morning. And wow, okay. Pay attention. S&P 500. I'm sorry, futures markets. Here we go. Brand new signals in progress today. What a whopper of a buy signal in the soybean market. We were oversold in the allotted number of look-back days. This is a little bit unusual. Normally, I see these bullish engulfings much, much, much closer to the bottom of markets, if not the bottom or top, exactly to the day. So I have some minor reservations about this, but I can't help it. I got a buy signal. I got a buy signal. So we are long from just a tick above yesterday's high, which is approximately 1484. And we're currently 1500 at the moment, not even close to the high of the day. This is a heck of a great scalp past tense in the last few hours. It looks like we're going to try to make new highs for this complete trend above 1550 in the next week or two. But we're also at the same time getting fairly close to overbought. Again, this is a little bit of an unusual situation. I normally don't see green bullish engulfing ER buy signals like we're looking at in the face right now after such a rally, but there it is. It fits all the criteria, but again, it's on the edge of what I like. Next chart. We have natural gas. This is a little bit out of order. I wanted to show you the other bean, oil, and meal in a moment, but we're coming up against resistance right now in natural gas, and I'm expecting it to turn back down again very soon. Now, we have another bullish engulfing in soybean meal. Stands to reason. If beans are going to do it, why might not meal and oil do it? And they are doing it now, today. So we have a bullish engulfing buy signal on soybean meal up against a little bit of resistance, but the trend is up. The trend is your friend, and that's basically true. Although it's a hackneyed phrase, it's true. Remember, we've been watching this junk for half a century. Next chart. Oh, I'm looking for a new high for the trend. And there's soybean oil. A bullish engulfing today, brand new signal today. I remember I've mentioned before that my signals tend to cluster sometimes. You sometimes get 2, 3, or even 4 within a month or less. Here's way back here, a couple of sell signals, 2 of them within 5 or 6 days. And the second one created a great sell signal. So the soybean complex, all of it, is generating buy signals today. Next chart. Well, we almost got the exact bottom in wheat. That's another grain. And that was 5 or 6 days ago, 6 days ago. And it so far has been an adequate, not great, buy signal. But if beans, oil, and meal are going to go up like I expect they will, then they're probably going to drag wheat up with it. So I like what I'm looking at. I think we've got a double bottom in wheat. I need to close above the high of this week, and that'll start to chew into the resistance area defined by that red bar, horizontal bar, which I should have grabbed and pulled it to the right a little bit more into today's activity. And I'll do that right now. And that's about where I want to put it. So I'm looking for it to get to the red bar and into this trading range. Getting above 812 is going to be very bullish. And that's a possibility, but let me talk about it as it develops over time. Next chart, cattle. Wow. We got a buy signal on March 24th, almost at the bottom of the break, after it got oversold. Great combination, exactly what I look for. If you learn anything from me, it's the overbought, oversold conditions that are very much a great warning that market's about to flatten out one way or the other and probably turn around for a significant move in the other direction. I didn't say a trend change, which it could be, but at least a significant move in the opposite direction. Look at this bullish engulfing that we had in live cattle just the end of last week on March 24th is now creating a new high for the whole trend, which was already a bull market. And now, watch out, yesterday and all day today, we are overbought. So we'll probably get a little bit more follow through to the upside, but we're in the 80 to 90 percentile finishing this rally. We're close to a high. I wouldn't chase this market to the upside. Don't do that. You're going to buy into a rally high. Wait a few days. We'll probably come back to 160 and maybe a little lower. Looking for a minor downside retracement starting very, very soon. Next chart. Platinum, gold, and silver. I got to tell you, I screamed bloody murder the day these three precious metals changed trend. And we're almost a new high for platinum for the trend up. Wait until you see gold and silver in a moment. Platinum's looking real good. We're coming up pretty strong. I'm looking for a new high very, very soon. Next chart. Silver. What can I say? That's it. End of story. Everything applies. Gold, sort of like platinum, little pennant formation developing over the last couple of weeks. I'm fully expecting that probably next week, we're going to see a new high for the whole trend. I love it. We got the bottom of the market, or the first low of a double bottom, and that was on February 28th. Green bullish engulfing. Just people pause the video, look back in time, only looking for the red and green bars. Everything else pretty much doesn't matter if you ask me, but you know, it really does. But sell signal didn't work very well. That sell signal's on the top of the market. That green one's on the bottom of the break. That green one's on the bottom of a very big break in a nice rally. They don't all work. We always have a protective stop immediately and automatically with this ER signal trading system, which is available. Email me. Next chart. No comment really on 10-year notes other than it's building a big long-term bottom, in my opinion, and has a little update today. I think very soon we're going to see new highs for the trend. That will help the stock market perpetuate a bull trend overall. The next one is bonds. Big resistance area defined by the red bar at the top, the horizontal, with 4 time frames creating that resistance and proving that it's legitimate. When we get above 134, we're going to see an acceleration to the upside, a major long-term bullish breakout, and everybody by then, past tense, will pretty much be convinced that we're at or very, very close to the highest interest rates for quite a long time to come. Next chart. OJ. Talked about the pennant formation before it broke out. Broke out, retraced, tested the pennant 4 days ago, and on its way up. Now, yes, it's overbought, and yes, I wouldn't recommend chasing this market to the upside, and you may have missed a little bit of a bull move the last couple of days, but it's too damn risky. It could open a lot lower all of a sudden, and your little bit of a profit turns to a loss. Boom. And or your protective sell stop, which typically people use as an open order, a good till cancel, will get filled at a bad price. So don't rush after this. Wait for a retracement. I know it means a little patience. Next chart. High grade, no comment really. Cocoa, overbought, probably going to have a correction right away. S&P 500 E-mini is a futures contract, but of course it's a stock market index as well. And I've just talked about at the beginning of this. And by the way, we're currently trading at 407.20, up 350, holding the rally. on the spider at the moment. We'll get back to that and take a quick peek before I finish. And overbought, don't run after sugar. Next, corn, overbought, don't run after corn. Too much technical resistance above the market at the moment. Crude oil in a resistance area, probably going to turn back down real soon. Not yet overbought. Next one is hogs. Pass on it. Heating oil. Wait until we break below these two green lines and you get a huge, major long-term bear signal breakout. I think it's going to do it in April. Next. And this is soybeans again, where we started. That's it for today, except let's take a quick peek at the S&P 500 here. Almost high and last. I'm switching to a 1-minute chart. And while I was yakking away, whoops, we have a minor rally high at 407.75. Not quite up to that 408.14 I wanted. And it's still only a point, less than a point away from that, with half the day to go. Keep in touch. Have a great weekend. Profitable trading to you. Stan Ehrlich. Bye-bye.